What's up, deal makers? In this video, we're going to talk about General Motors and why it might be a good second option in case you missed out on buying Tesla. If you're like me, you missed out on buying Tesla last year or 2 years ago, then maybe if you want to jump into the EV market revolution, then General Motors might just be for you. So let's dive in. So before we proceed, let's have a quick overview of what I will cover in this video. We're going to have just a quick overview of GM's business, then 7 reasons why you may not want to buy General Motors. We're going to enumerate all the reasons why GM is not a good stock to buy. And then we're going to go through 10 reasons why I think GM is worth looking at. So let's look at the business of GM first. GM's focus is to have a world with zero crashes, zero emissions, and zero congestion. So that's where the play on electric vehicles comes in. They want to participate or create a world with zero emissions. And that's not surprising because the entire world is moving in that direction anyway. But there's also these two important elements, zero crashes. They have a big focus on safety and zero congestion, which means they want to be a solution to the traffic problems all over the world. Let's look at the brands of GM. GM started in 1908, and since 1908, they have had a number of brands under their name. But around 2008, 2009, GM underwent bankruptcy, and so they were forced to sell some of their other brands. And they have only 4 brands left, at least 4 car brands left under their banner. So there's Chevrolet, their entry level brand. Then there's GMC Buick and their high-end brand Cadillac. In addition to these car brands, they also have some supporting brands with OnStar and Periscope involved in safety and emergency services. AC Delco provides for the replacement parts of GM vehicles, and GM Financial, which provides leasing service and car financing services. And they have 3 technology brands, starting with Ultium, their electric vehicle platform, Cruise, their self-driving or autonomous driving platform, and BrightDrop, a last-mile delivery ecosystem, which we will talk about in detail later. So those are the 11 brands of the GM ecosystem. Now let's look at the 7 reasons why you might want to avoid GM. If you already have Tesla, then you probably don't have a lot of reason not to buy GM. But if you're like me and you don't have Tesla, you don't have NEO yet, then maybe you might want to look at GM as your potential play in the EV and autonomous driving space. But before you get into buying GM, you may want to look at the 7 reasons why you might want to avoid GM. Number one is dropping revenues. So since 2018, there's been a trend of dropping revenues for GM. Now, understand that the car industry has ups and downs. There are boom and bust cycles. This is a very cyclical industry. So this downward trend could simply be a manifestation of that cyclical nature. Now, obviously in 2020, almost all industries went down, but this would be something that I would like to see reverse as early as 2021. Okay. Next reason for avoiding GM is dropping earnings. So usually when revenues drop, then earnings also drop. So this is what is exactly happening with GM. But if you were able to watch my previous video on McDonald's, McDonald's had dropping revenues, but earnings was actually going up. So it's not a given that when revenues go down, earnings go down automatically. But in this case, the same is true for GM. And that trend of dropping revenues actually manifested in the chart of GM. So you can see here, 2018 was probably the peak of sales for GM. Then it started to go down and then it dropped obviously during the pandemic, but it has already seen a very, very strong recovery in the past year, and which can be attributed to GM's shift in strategy to electrification. Number 3 reason why you may want to avoid GM is its high debt level. Looking at the debt ratios for GM, current ratio, not a problem. So short-term Short-term debt is not a problem. It is covered by its current assets. Its current ratio is at 1.0, but the debt to equity ratio is at 2.44. That is quite high, which is to be expected for a manufacturing company, a company that has high capital expenditures. I would like to see this at least below 2, ideally below 1. Fourth reason why you might want to sell is hedge funds are selling. So let's dive into my eToro platform. Let's see what's happening to GM when it comes to hedge funds ownership. So we're here in eToro. Remember, if you are from outside the US and you want to be able to trade in the US, then when you open an eToro account, you'll get $50 free money when you use my referral link below. So as you can see here, this is the hedge fund activity for GM. Hedge funds decreased their holdings by 140 million shares, and you can see the huge drop in Q4 of 2020. I don't know if the hedge funds have bought back for Q1, so that's something that we don't know yet, but definitely in the fourth quarter of 2020, hedge funds sold their GM holdings. We can see here the recent activity. So Rick Dillon of Diamond Capital reduced his holdings by 8.26%. There's no change in Fairfax. For Alston Capital Management, they reduced it by 28.54%. Mario Gabelli added 8.22%, while Ray Dalio sold out his position 100% in GM, and Edgar of Greenhaven Associates sold out also their position at 100%. So that could be alarming. Obviously, they have more information than we do, but of course, they also make their mistakes. They're not perfect, but this is a huge negative against GM. That said, this activity is for the fourth quarter of 2020. There were a couple of things that happened for GM in the first quarter of 2020 that you may want to factor into in your decision. Fifth reason for avoiding GM is Tesla's massive lead. GM has elected to continue their internal combustion engine-based vehicles, so a vast majority of their production is still devoted to gasoline-powered or diesel-powered vehicles, and Tesla is already 100% EV, and they have a massive lead in that space. So looking at the best-selling cars in the first half of 2020, it's all Tesla in the top. The Chevy Bolt, which is GM's EV car play, is sitting at fourth place with 8,370 units. So it's flanked by four models of Tesla vehicles. Then there's Nissan, Audi, and Porsche Taycan. So Tesla has a massive lead in the EV space, and that could be a legitimate reason why you may want to just avoid EVs or at least avoid GM because it's going to play catch up to Tesla, and who knows, maybe they won't be able to catch Tesla in this space. Number six, supply chain issues. So recently there was news that came out that there's a semiconductor shortage that hit the automaking industry, and it hit all vehicle makers like GM, and GM is forced to close down a few of its plants. Fortunately, the plants that they're closing down are dedicated to the old models, so the gas-powered vehicles. So they're not closing down their EV manufacturing plants. Those are continuing to go. Another reason, well, the last reason why you might want to avoid GM is union issues. So in 2019, there was a strike by the United Auto Workers, GM's union, and it cost them $4 billion in 2019. Now, compared to Tesla's workers have not yet organized as a union, so Tesla does not have this problem yet. We don't know how long Tesla will be able to fend off the union or if they'll be able to really operate without a union. But GM definitely has that union. They cannot disband that union anymore. Then maybe this could be another reason why you might want to avoid GM. So those are the 7 reasons why you might want to avoid GM. If you would like to receive warnings like this, just to make sure that you don't make the same mistake, please hit the like button for the YouTube algorithm. That also helps this channel improve, it helps this channel grow, and it encourages me to make more videos like this. Now let's look at the flip side. What are the 10 reasons to buy GM? Starting with improving EV sales. So in 2017 to 2019, the Chevy Bolt sales were actually going down. But in 2020, there was a definite tick back up, to the positive, jumping up 26%. So this is a very, very encouraging sign that GM may have turned the corner on its EV efforts. The second reason to buy GM, they will be introducing new EV models starting with the 2022 version of the Chevy Bolt. And then there's the return of the Hummer, and the Hummer that they'll be bringing back is going to be an EV truck. And then they'll also be introducing a Cadillac Lyric. GM will be capitalizing on that brand loyalty, and they'll be offering, they'll have a base of customers already, to offer these new EV models. Number three reason for buying General Motors stock is the presence of an EV solutions in last mile delivery. What do I mean by that? If you remember BrightDrop, GM's solution for last mile delivery. And central to this is the BrightDrop EV600. And the cool thing here is it's not just a truck, it's actually a whole suite of solutions. You have the trucks, you also have the electric pallets, and then you have software services for optimizing delivery, logistics, handling, and then support services such as charging their vehicles, parts and service, and upfitting services if you want to upgrade your fleet. This is designed for logistic services like FedEx. FedEx is the first customer of GM for BrightDrop. And so GM will be competing not with Tesla in this market, but they'll be competing with Workhorse. Number four reason for buying is improving battery technology. So GM had a collaboration with LG Chem. They came up with their own brand of car batteries called Ultium. This is the Ultium platform. For GM, the Ultium platform is kind of like the foundation for all of their EV designs moving forward. So the Chevy Bolt is not yet built on the Ultium platform, but for all models moving forward, like the Cadillac Lyric, like the Hummer truck, and the Bright Drop delivery truck, they're all built on the Ultium platform. In this article in Forbes, so this shows GM developing lower cost lithium ion batteries to power their new electric vehicle lines. So they were able to reduce the requirements for cobalt. They were able to reduce it by 70%, and thus they were able to bring down the cost of lithium ion batteries because batteries are a significant cost for EV vehicles. Number five reason is autonomous driving. GM already has an approved hands-free autonomous driving system for freeways or for highways. So Super Cruise is already approved for hands-free driving because it uses facial recognition technology to study if the driver is keeping their eyes on the road. So there's no need for them to put their hands on the steering wheel. So GM is one of the leaders in autonomous driving. So it's not just Tesla that is leading the way. Now, this is important because ARK Invests, or Kathy Wood of ARK Invest, actually projects that Tesla will be one of the biggest players in the robotaxi revolution. This is one of the technology trends that is being envisioned in the future. Transportation systems will rely more on automation or autonomous driving. GM already has experience in this area. In fact, they already have 1.2 billion miles logged or recorded when it comes to autonomous driving. And in addition to that, Microsoft has already announced that they will be partnering with GM's Cruise on self-driving cars. So Microsoft will be providing the cloud infrastructure for GM Cruise self-driving or autonomous driving network. Number six, GM already has a massive dealer network. So I Googled how many dealerships does GM have in the US. they have more than 4,100 dealerships in the US. Compare that to Tesla that has more than 130 stores in the US and galleries in 34 other countries. But GM has stores in more than 200 countries. So in terms of distribution, the distribution network is already in place for GM. All they need to do is manufacture and develop the cars. Number seven, GM is a master when it comes to partnerships. You've already heard two of their partners, LG Chem for the Ultium system and Microsoft for GM's Cruise. But they also have partnerships and joint ventures especially in China. So they've actually been selling a lot of EV cars in China already. So this is the SAC, GM, and Wuling partnership. This car is actually the number one EV vehicle or the number one selling EV vehicle in China in November. This is the Baojun model, which is another mini car concept. And those cars have sold a lot in China. So from January to November of 2020, Tesla was still the best-selling car, but the Wuling Hongguang Mini EV model was uh, was number two with 85,000 units sold. GM has been an active participant in the China market through their partnerships. And like I said earlier, the Wuling Hongguang Mini EV was the number one selling uh, plug-in vehicle in China in November of 2020, outselling the Tesla Model 3. So GM sold a November record of 294,500 vehicles in China. Compare that to Tesla's production of close to 500,000 units for the entire year. And not only that, GM is also partnering with EVgo to establish more than 2,000 fast charging networks all over the United States. So you can see here these bolts charging on this EVgo fast charging terminal. GM is also very busy with their investment. So Lordstown was founded by a former GM executive, and he actually bought GM's former plant in Lordstown, Ohio, and converted that into an EV manufacturing facility. They'll be producing electric pickup trucks or EV pickups. GM is going to fight Tesla on a lot of fronts. So GM will be making their own vehicles, but they're selling competing vehicles against Tesla through partnerships and through their investments. I believe they have around 30% stake on Lordstown Motors. And if Lordstown succeeds, it's not a stretch that GM might end up buying this company. And in addition to that, GM has already committed to produce fully electric vehicles starting today on to 2040. And in that direction, they're already converting one of their factories. They're calling their factory in Detroit uh, Factory Zero. So this is going to be their first fully dedicated EV assembly plant. Number nine reason is a strong buy rating from Wall Street. So let's go back to eToro. And as you can see here, there is a strong buy rating. There's a strong analyst consensus. 92% say GM is a buy. Only 8% says it's a hold. There are 13 analysts covering GM. The median price target is $61.15. So that shows a 14.09% upside from today's price. But the highest estimate is $80. So that represents around a 40% upside for GM in the next 12 months. You can see here the latest recommendations. There's Anindya Das from Nomura, Joseph Spack from RBC Capital, Emmanuel Rosner from Deutsche Bank, all giving buy ratings. Dan Levy of Credit Suisse, Brian Johnson, Adam Jonas. So Morgan Stanley gives the highest target price for GM at $80. Then there's JP Morgan, Citigroup. So all of these analysts giving a buy rating, and the lone analyst giving a hold rating is Philippe Hochua. I don't know if I pronounced that correctly, from Jefferies. So there is a strong buy consensus for GM. All right, and finally, The number 10 reason for buying GM as an EV play is its cheap valuation and clear upside, at least compared to Tesla. So comparing the numbers for between GM and Tesla, so we can see here that total vehicle sales for GM stands at 6.4 million, while last year Tesla produced 500,000 units of cars. Now, granted, this is probably 99% gas-powered, no gas and diesel-powered vehicles. But in terms of manufacturing capability or in terms of vehicle sales, GM is the leader. In terms of revenue, GM has big numbers, 122 billion compared to 31 billion for Tesla. Net earnings exit at 6.2 billion, zero point 0.7 billion for Tesla. Free cash flow at 16.7 billion, 2.8 billion for Tesla. A price to earnings ratio of 12.4 compared to Tesla, which is at 1,312. Now, forward PE projections for GM is at 8.68, and for Tesla, it's at 150.91. This really shows me that there is definite upside for GM. Maybe it's not a 10x stock, but at the very least, this is a 3x to 5x play. GM is going to be one of the beneficiaries of this shift to the EV revolution. And if that is good news for you, please make sure to smash the like button for the YouTube algorithm. That helps YouTube show this video to more investors like you. And it also helps the channel grow. And it helps me make more videos. And my personal verdict, yes, GM stock is a buy now. While GM is still on the very, very early phase of their EV shift, there's still time to buy, even though GM has already moved up 100%, from their lows in March. There's still room to grow, as you saw in their price to earnings ratio. There's still an upside of, I think, 3x to 5x. Maybe 5x is the most hopeful, but who knows? If the robotaxi business is as big as Cathy Wood says it will be, then who knows? Maybe GM could be a 10x play as well. Next stocks on the list for analysis are Roku, Alphabet, and Carvana. I hope you stay tuned for that and make sure that you subscribe to the channel. And I would recommend that you watch other stocks that I have reviewed for best stocks to buy in 2021. Make sure to subscribe, hit that notification bell button so that you'll be notified when there are new stock analysis videos. So I hope that you enjoyed this video. I hope you learned something, and I hope that all of your deals will push through. See you on the next video.